Hello, everybody. Welcome to Race Progress Trading. Power, 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 power. So, if you're new to this channel, subscribe, like, share, comment. I'll be leaving this on Facebook also. So, let's connect. Um, I'm so happy. I'm so grateful. It's a good day. Uh, all the best to all those who are trading the financial markets today. And specifically on this channel, you are going to learn about business, forex trading, and personal development. And these are our three pillars of success, which we are going to be rolling with as long as we are here on Raised by Grace Trading. So I would love to share a few things concerning what is expected of you when you enter the forex market. Most of us will find it difficult when we are approaching the markets. You put your computer there, and then there will be all this confusing graph. Sometimes you don't even know where to start from. So I'm going to shed some light on that so that it can help you as you are trading your forex markets. And before you do your technical analysis, what you would need to put in place, how to go about your technical analysis. And then, if you want to know more, please feel free. Join us in our forex lessons. We are here to make sure that you have the proper guidance that you require for you to be successful in the forex markets. Okay, so we are about to do a technical analysis. It's a nice morning. If you're trading the London session, past 8, that's when you would go on the markets. And if you want to trade the New York session, then let's just say you'll be entering the markets past 14. You do analysis past 14, then 15:30, you are geared to enter the New York session. So most of the time, if I'm trading the pound versus the dollar, I'd love going with the London session, meaning 8 hours I'll do my pre-market analysis, and then 9 hours, 9:30 I'll be trying to execute some trades, and then by 10:59 I'll be out of the markets and I'll be calling it a day. And if it's gold, then that's when I'll be in the New York session and so forth. So hope you got something on that. Now, so you open your computer and then you pull out your financial assets, the one that you love, okay, the one that you feel you read better than any other. But to be honest, when you know how to read one financial asset or a currency pair or whatever you may want to call it, that's easier for you to relate with. It's the same because the market will always move in the same way. It's either to be going up or it to be going down or it to be going sideways. So the real thing is to learn how to read the markets. So let's say, for example, trader A here pulls out a chart of the Great British Pound, okay, versus the US dollar, and then he pulls it out, and then he wants to trade it and find opportunities for that session. So the first thing that we are going to be doing is you are going to look at the higher time frames. So start from the daily, and most of the time when you read the daily and the 4 hour, sometimes there's no much difference unless if we have those big impulsive moves, and meaning you have to look at both time frames. But you can start from the 4 hour, especially if you just want to capitalize on a small move in the market, just to make a scalping trade, quick move, 30 to 45 minutes, and you're out of the market and attend to other things. Because for sure, if you are going to build a strong business, you are going to rely on a lot of things. You are going to try to pull money from the forex markets and then invest in other things. That way, you have more income streams. Okay, so yes. So let's say you're on the 4 hour, and then on the 4 hour you are identifying your trend, you are identifying the direction of the market. Okay? So you identify your trend from the 4 hour and the daily time frame. Then you further look for more confirmations on the 1 hour time frame. And I know some people they don't know what we are talking about, so at least make time to research. Leave your questions in the description below. Let's answer those questions. Let's get you on the same pace. Let's all learn and let's connect. So on the 1 hour time frame, you'll be just seen for confirmation candlesticks. Okay, you will look for that bullish engulfing. Okay, when you are certain of it that okay we are about to reverse, slide a little bit lower on the 15 minute time frame. Check for those bullish signs or bearish signs. Okay, so bullish signs is when the market is about to trend higher, going up, and then the bearish signs is when the market is going down. That's why you find that in our symbols in Forex, there is the bear, and the bull. So the bear will be like pushing downwards like this, and the bull will be pushing upwards. So bull means it's going up. Bearish means it's going down. So bearish and bullish. Okay. So execution. When you're executing your trade, aim for the 5 minutes. Sometimes even the 1 minute, depending on how. Now listen carefully. Depending on how volatile what you're trading is. Sometimes you would get a nice sniper entry using the 1 minute just below the tip. And sniper entries for me are the best, which I love to take because you have zero drawdown trades. And zero drawdown trade simply means that your trade will just enter into profit. It won't take long for it to enter into profit. So it's like small negative and then positive all the way to the upside. So that's why I encourage you to take those sniper entries. But before you attempt to sniper or before you attempt to enter, make sure that you have checked your direction from the higher time frame. Mark your key resistance and support lines on your higher time frame. I emphasize on this so much because that's going to give you good support and resistance, supply and demand. Because at the end of the day, what we are trying to do is we're trying to analyze and see where the best supply and demand zones are for us to buy and sell because it's a transaction. Okay, it's commerce. So we are trying to apply all these things when we enter the charts. We are trying to apply the basic business principles of supply and demand. We are putting them also in our technical analysis when we are trading. So this is going to greatly improve our odds and our probabilities when we are trading the financial markets. And then also we also now bring in our fundamentals, the economic factors which are also going to affect the market for volatility's sake. Okay, so supply and demand, these things are very important. In your own spare time, find quality time to just research about them. Books are important. Books help us. Like my father used to say, he used to tell me to say, when you are reading a book, it's like you are communicating with the author. It's like you're having a conversation between you and the author. So yes, we can't avoid the books. We just have to be in the books and just see, learn the views and hear what other people who have gone before us and what they have done and how we could improve that and then create our own success in this time and age. So that's very important. And to end this video, I'm going to talk about psychology. Your psychology is very important. And then I'm going to derive the psychology. Before I even talk about the psychology in trading, I'm going to take it from how you personally look at life, how you are built up, your strengths and your weaknesses, because all these things are going to affect you even as you come to risk tolerance, as you place those trades and handle all those things. So I'll be happy to see you in our sessions. We have daily sessions, and I'll be happy to see everyone on board. Let's learn how to trade the financial markets, especially now when the dollar is fluctuating. It means that for every dollar that you make, you have a good return